Alrighty, let's talk some Apple.
Said this morning that Apple must pay tariffs of at least 25% on iPhones made outside the United States. And in comments this afternoon, he said rival Samsung could face similar levies. But can Apple realistically bring manufacturing back to the U.S. here? And what does it mean for investors if it can't? Tim, what do you say?
Well, I think investors aren't really even focused on this issue, and they have to be, but we thought we were at least away from it. And again, I say that because I think investors are more focused on the week that was also Johnny Ive, the week that was, effectively we just learned about at least a ruling on the services business that may affect App Store dynamics. The fact that we've been worried about gross margins, that we've been worried about the overall iPhone kind of unit demand, and that's something that I think is really overall then dropped inside of the AI story that most people feel like isn't really going Apple's way. So throw on the tariffs, and I get why the stock's under pressure. I think the dynamic here is one.
Okay, before we go further and we start talking about the stock, I think I got to say something very important here for everybody, okay? Listen, blue Colt, red Colt, okay? Listen, GOP, the Republican Party has changed. There's no doubt, right? This was inconceivable in past generations for the government on the Republican side to be telling companies, you can do this, you must, do this or do that, or, you're going to face these tariffs and all these problems, your disruption of your business model, things like that. Like, that was not a thing in past. And so the fact that that's a thing now it's interesting. It's a change in the party. And I'm noticing a lot of changes on both sides, both parties. And I'm like, it's weird times, man, because we could end up in a situation. Do understand the parties have changed before. It wouldn't be the first time this happened. Like the traditional kind of Democratic more policies, you see a lot of those today. Those used to be Republican, and Republican used to be Democrat. It was weird. And so if we get a flip in this next generation or so, like that would be wild, man, wild. But I'm kind of seeing some things on the Democratic side that I'm like, wait, that seems a little bit more on the other side. And then now there's some Republican things I'm like, wait. No, the other thing is, the other part I do look at, and I say Apple has spent $600 billion or some crazy amount over the last 10, 12 years on share buybacks, right? Could they have brought back iPhone production back to the United States and used a portion of that capital? Absolutely, they could have. Absolutely. It would have been extremely costly. They would have, it would have been extremely costly. I'll just say that. But could it have been done? Absolutely. You could do anything. Like, you're going to tell me you couldn't bring it back? Yes, you could bring it back. But it would have cost them billions of dollars is an understatement. It would have cost them tens of billions of dollars, if not more than that, right? To have brought iPhone production back to the United States, and actually, I shouldn't say back to the United States because it never was in the United States, but just brought it to the United States. But the investors would have been like, why are we doing this? It's going to make our product less competitively priced in the market. It's not like it's going to function any better or work any better. And meanwhile, we want share buybacks. So the investors look at that and they say, that seems like a silly waste. So, but it's a tough ordeal, man. It's a tough ordeal, but it is what's going on.
Where we really don't know where this is going to end up, but I agree. It's going to be very difficult for Apple to suddenly change where their manufacturing is, even though they just told us they're going to be 50% India at some point very soon. And that's something that I still think is hard to believe. But again, the core for me was not the headlines today from Apple. It's what we had before we got here today.
Well, I believe...
Oh, and by the way, there's also a lot of propaganda out there right now that is silly. Listen, I'll tell you guys about some crazy propaganda that's going on out there around this whole Apple situation. They're talking about if the iPhone was made in the United States, it's going to cost $3,000. Baloney propaganda. No, it would not cost $3,000 to make an iPhone in the United States of America. They would get very efficient very quickly. Would it cost more money? Absolutely. There's no doubt in my mind that it would cost more to manufacture iPhones in the United States of America than India, than China. No debate. But would it magically go to $3,000 plus for an iPhone? No. That's ridiculous, okay? That's just like good propaganda to throw out there, saying people are like, oh my gosh, $3,000 for an iPhone, forget it. Keep them in India, keep them in China. Like, that's a crazy number, right? No, it wouldn't be that ridiculous.
Deserve some credit for trying to be nimble in terms of moving manufacturing away from China, kind of, strategically maneuvering with regards to its supply chain, making sure that that goods were headed for the U.S. were produced at a...
And I used to be a very large investor of a company that proved this point. Tesla. Tesla makes the same exact vehicle in Shanghai that they make in, Fremont, California. Is it more expensive for them to produce a vehicle in Fremont, California, let's say a Model Y, than Shanghai? Yes, absolutely. Is it triple the price? Quadruple the price? No. And I can tell you a Tesla is far more complex, and it's not even close than an iPhone. Because you got to understand, a Tesla is an iPhone and a car put together. And it still doesn't cost 3x, 4x, 5x, these silly amounts that the propaganda is thrown out at you, okay? So could you make iPhones in the United States? Yes. Will it take a long time to get everything situated? Yes. Would it be more costly? Yes. Is it triple, quadruple, 5x the price? No. Propaganda, man. Propaganda. So just understand that.
Yeah, and just finding a way to at least on the surface, seeming like they were making efforts to comply with the new regulatory framework. And I think today was a bit of a shot across the bow, but I don't know how serious to really take the threat. It's almost as if the tariff thing has been kicked up again. 25% seems to be somewhat of an arbitrary number. Like, how realistic is it for them to be expected to kind of completely uproot supply chains and then move them here? Like, what are the cost implications? And for me, my real question is, are they really trying to circumvent the 25% tariff? Or is there a situation where the tariffs actually get raised to a higher level because they say, listen, it's actually more cost effective for us to just go on ahead and pay this tariff and keep our manufacturing where it is? And I don't think 25% is sufficient enough for them to even explore looking at manufacturing alternatives. So for me, it just seems like it's somewhat of a way of a governmental land grab. And to me, that somewhat flies into the face of the spending bill, the tax cut bill that we're seeing pass through the House. So for me, I really don't know what to make of it, because on one hand, it's like we're preaching fiscal discipline. On the other hand, we're looking at 3.8 trillion, and we're looking at this tariff number that seems to just be a drop in the bucket. And I really can't make heads or tails of it. For now, I really think the downtrend in Apple is just continued erosion of their underperformance on the AI front, and also some opaqueness around the whole Google situation.
Yeah, another way Apple could kind of get around this situation they could take a victory here, and then Trump could take a victory, right? Like, ultimately, I think what Trump really wants is he wants to be able to say, I brought iPhone to America, right? Like, I had it made in America. So, I mean, Apple could get sneaky here, and what they could do is just have much of the iPhone still made in, let's say, China or India, and then you kind of send a few of the main parts that are already put together to the United States. It's finished in the United States, so it says it's assembled, it's made in America, but really, like, a lot of the core technology and putting the chips together and everything like that, and the semiconductors, it actually took place in China or India. You just finish the product in America, but then you say, oh, it was made in America. Yeah, it's stuff comes from all over the world, but at the end of the day, we're making the product, right? Look at our big factory here where, it's just you slapping a few things together and kind of finishing off the product. So that's a way to kind of get around things. Now, next question here is Apple a good buy, right? Well, to answer that question, what you have to do, you have to compare Apple versus its other big tech peers, because at the end of the day, when it comes to buying a big tech, you've got to compare them versus other big tech companies, because that's like, you got to compare Mag 7s versus Mag 7s, and doesn't make sense, right? Because you're not going to say, is Apple a better buy than, I don't know, Honest and HNST? Those are two apples and oranges of stock, way too different risk profiles and upside profiles and all those sorts of things, right? So you got to compare Apple versus companies like Meta and Google. So my question to you is, Apple has a lot of issues. They have this production issue and the potential tariffs, and how are they going to get out of this mess, right? And Trump seems pretty on them right now. Like, he's kind of got an agenda against them. So they got a whole situation. And then they're likely going to face some major disruption questions over this next, I would say, 5 or 10 years, right? It's not happening this year, but there's no doubt with OpenAI acquiring Johnny Ive's company there's no doubt that OpenAI is going to push hard into hardware with, obviously, all their software suite over this next 5 or 10 years, right? It's very clear that Meta wants to push more and more into hardware. When you see, obviously, what they've been doing with, Oculus since that acquisition happened, right? In VR and AR, when you see what they're doing with the Meta glasses, it's clear as day Meta's going to push hard hard into hardware over this next 5-10 years, right? And those are going to be two major competitive forces, and it's clear Google is there as well, and they're going to compete hard. And the issue with Apple is we haven't seen Apple ever have any success that has not stemmed from a product that Steve Jobs and Johnny Ive created. Every single successful product you've ever seen, like super successful product, every one that actually makes Apple the money, were all creations of Steve Jobs and Johnny Ive. And so can Apple do it without those guys? Because any products we see over the coming years that are going to try to compete with OpenAI, that are going to try to compete with Meta, Google, things like that, it's going to have to come from Apple's internal team that has nothing to do with Johnny Ive and Steve Jobs nowadays. And that's going to be interesting. Can they launch the next iPhone? And when I talk about the next iPhone, I'm not talking about the iPhone 18 or whatever the model they're going to be on. I'm talking about the next type of iPhone type product, the next type of iPad product that changes the game for the next, generation, the next MacBooks and those sorts of things, right? Like brand new products that they've never released before, that have nothing to do with an iPhone, that have nothing to do with an iPad or a MacBook. That's going to be interesting, right? Can they do that? I don't know. We've never seen it before. They tried their VR product they came out with, right? Whatever they call that, Vision Pro. That was their first real attempt on a product that Johnny Ive and Steve Jobs had nothing to do with, a new fundamental product. Complete failure, complete flop. So, can they do it? I have doubts. I have real doubts. Steve Jobs and Johnny Ive, they built a $3 trillion company. I don't know if these guys that are over there nowadays can do that, right? Now, when it comes to Meta, it's a better buy. There's no doubt. It's a cheaper forward PE. You have less questions about disruption. Like you have Zuckerberg there who's proven time and time again he can get the company through any storms, right? Stay innovative, stay coming out with new products and services. You can sleep well at night holding Meta, right? Better growth rates, right? Double-digit top line, bottom line. You look at Google, 17 forward P, top line, bottom line, double-digit growth. And Google's a company that I see tons of innovation consistently coming out of. Like no disrespect to Apple, but it's not even on the same level as Google in terms of how fast Google, how many different services and new products Google comes out with every year and shows off versus Apple. It's like a night and day difference. So at the end of the day, I would much rather hold Meta or Google, right? Then we think about somebody like in Amazon, right? Amazon, you could say Amazon trades richer than somebody like Apple, no doubt, right? 31 forward P versus 25, but you're going to get, not even close, far exceeding 2x the revenue growth and earnings per share growth that you're going to get somewhere like an Apple, right? And geez, you think about a company that's going to be very hard to disrupt over this next decade. Could you disrupt Apple over the next decade? It's going to be difficult as well, but you could do it, right? If you can make new hardware products that are good enough that it eliminates the iPhone, right? Because that's the big key. You have to, if you can dent the iPhone business, then you can take a lot down in regards to that. Amazon, is there any real competitive pressure on Amazon for the next 10 years? Not really. AWS is the behemoth, right? You can't really compete with them in regards to that. And then, it's a backbone of so many companies and so much of the internet. And then you think about that e-commerce side of the business. You know how much money you're going to need? You want to try to compete with Amazon? Come on, man. You can't do it. You can't do it. So Amazon's really won the next decade, right? And then their advertising business is just beautiful. Now, obviously, Tesla trades at really high valuations, but Tesla's a whole different animal when it comes to this game, right? So then you can say, 158 forward P. So you can say maybe Apple's safer than them. NVIDIA, when it comes to NVIDIA, you're looking at a 32 forward PE here. So you're above Apple, but once again, you're getting likely better growth. And then look at who leads NVIDIA. Jensen leads NVIDIA. And you think about a man that is just, you don't want to, it's tough to compete with him, right? NVIDIA is a very, very special company. You could kind of say Jensen is arguably the Steve Jobs of the last decade, right? You can make a very strong argument that the Steve Jobs of the last decade has been Jensen. Very strong argument. When you think about, really changing the world and really mass adoption of products, NVIDIA has been that company, right? So that's my take on Apple. It's just better opportunities, man. You know, it's not that it's a bad company. It's not like it's horrible valuation here. It could be a moneymaker. It's just there's way more money to be made. And it's like, do you want to make a little money? You want to make a lot of money? Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. I'm going to pull up Tom Lee, everybody's favorite bowl.
Head of research,
there we go,
Tom
baby.
Lee. Guys, welcome. Charlie, you like small cap value here versus large caps, but this is a day when a lot of risk, tech, and big tech are rallying. Why is that going to stop?
Well, because over the long run, valuation and multiples have been very good predictors of small cap versus large cap. If you look at a 3x3 matrix of small, medium, large, value, core, and growth, the one sector that's currently trading at a PE below its historic average is small cap value. Large cap growth is trading at the biggest premium to its historic average of any of those buckets. And historically, again, that predicting PE, relative PE, has been a very good predictor of future performance. So I acknowledge right now, large cap growth has got all the momentum, but on a valuation basis, small cap value is the one attractive area.
Tom Lee, you don't completely disagree, but I think you mostly do. You still like the large caps. You still like tech as well. Now, small caps, your small cap call has not worked yet. So why do you think, on the flip side here, large caps and tech can continue to perform?
Well, I mean, today, S&P and tech, I mean, they're up over 2.5%. It's not because the tariff headlines were better over the weekend. It just shows you that most investors and many large investors are dramatically underweight equities, and this is, you know, a bit of a panic buy into the market. And
Panic buy into
I
the
think
market.
when they look for, when we think that this is what's taking place, that means leadership's going to come from the large liquid sectors, and that's why we think the Mag 7 is going to be leading. I mean, financials, industrial.
This is why, you know, it's so valuable to obviously follow this reaction channel here, because I'm always bringing you guys these clips. And remember, there was like, how many weeks ago was that? Maybe 3 weeks ago or so. Remember, I reacted to the video in the fund manager said he was 95% cash, and I was like, I already knew we had an issue in regards to so many fund managers so underweight the market. I didn't know it was that severe. When I heard that fund manager say he was 95% cash, I was my jaw dropped up. What? 95% cash? And you're a fund manager? Dude, and this market just keeps rallying in your face? You're panicked. Dude, we hit all-time highs here, which is perfectly possible in June. Could we hit all-time? NVIDIA comes out and reports a banger, and it's all big tech moving again. Night. We're going all-time highs. And you're a fund manager and you're sitting 95% cash while the market's just skyrocketing. It's not like this has been a small move. The NASDAQ's up like, oh gosh, the NASDAQ's got to be up 26 to 28%. We can call it 27% at the midpoint since those lows in what was that, the second week of April. 27%? The S&P 500 is up 20 plus percent since that time. And you got these fund managers sitting over in gold and cash? Oh my gosh. And when he talks about panic buy, that's how you get a panic buy. When you find a bunch of fund managers that are underweight equities by 1.5 miles. Oh my.
Well, but a lot of washed out stocks, like stocks that really got beaten up early in the year, didn't make new lows in April, were the Mag 7. So I think that's where the leadership's coming from, John. But I agree with small caps that when investors finally start to focus on fundamentals, and small caps will rally, and I don't think it rules out small caps having a huge second half.
Okay, hold on. We've got...
So Tom Lee made, I mean, I'll be honest, he made a mistake last year because he made this prediction about small caps are going to like boom. You know, he talked about 50%, blah, blah. Obviously, small caps were not all that. But with that being said, there's no doubt you can be very bullish on small caps for the next several years if you're just pretty confident that interest rates are going lower or staying around here, right? It's just the timing, to get the timing right on small caps is really difficult, man. To get the timing right in terms of, you know, here's when it's going to boom, difficult thing to do.
Earnings rolling in.
7 cents in, potential like that.
It is lower, right?
That's right.
Kramer, that's coming up, going on in Congress.
I would say short term, it's very hard to predict when these budget deficits are going to show up in a big way. But in the long run, what can't go on forever ends. And these kinds of deficits that we're running right now can't go on forever. Very hard to predict when it's going to end, but we are in unprecedented levels of debt right now. We are unprecedented levels of deficits. This
is a problem with that Okta right here. Teaching moment for everybody watching this right now. Listen, you got a forward P of 50 plus. You got to come in with banger numbers, banger guidance. If it's not blown out of the water and you got a forward P 50 plus, it's not good enough. Your stock will go down and get hit severely. You know, if this was a stock that was trading at a forward P of 20, 25, it was a totally different story, right? But when you got a forward P of 50, if you got anything that's like not all that, your stock's going to get hammered. That's where the part that, you know, if you're experienced in the market, you understand valuations matter significantly. If you're newer to the market, you still got to learn that piece. And there's a lot to learn in regards to that, so you don't get sucked into some stocks like that. And, you know, next thing you know, you're down huge.
This is going to be inflationary. Deficits are by definition inflationary when the Fed starts to fund them by borrowing more or by printing press. It's going to be inflationary, and then tariffs are fundamentally inflationary. So, again, very hard to call when, but long term, this is the real threat.
Tom, security stocks have been on a nice run in general, but as we see Okta sort of pulling in the full year revenue guidance here, even though the results themselves look pretty strong, Tom, that and also the context of Salesforce doing this attempted buy of Informatica, is this environment more bullish or is it not with the macro uncertainty?
Well, I mean, companies should understandably be cautious because, you know, the tariff drama is still in play. I think investors are ultimately going to give pass to companies that don't give guidance. I mean, I don't think Okta's sort of pulling guidance means actually there's a downturn coming. It's just, I don't know how anyone could actually say what they expect for the next 2 quarters. But that being said, I do think 2026 is shaping up to be pretty good. So I not only do I think it's a good M&A environment next year, but we'll have deregulation, we'll have some visibility on taxes. I think the tariff drama is behind us, and the Fed, who's been on hold, is probably going to be dovish next year. I mean, to me, all of that means PE should be going up, and I think the $7 trillion of cash on the sidelines starts to get deployed.
Okay. Charlie, we've still got rates higher for at least for now, probably for longer than a lot of people would like. And we've got a consumer that's overall getting pinched on the credit side. We'll see how overextended. Now, I know you like value, but value gets affected by those things. No? How should investors navigate that?
Yeah, a couple of thoughts there. One, it is true that higher interest rates actually have less effect on value than on growth because value stocks have a shorter duration. Their cash flows are coming sooner than growth companies whose cash flows are in the far distant.
Good point.
So higher interest rates, all else equal, have less effect on value stocks than on growth stocks. The low PE versus high PE. But you're absolutely right. One of the real bear cases on value is the consumer. Today's news was very positive for the consumer confidence, but all of us who are talking to companies are still worried about the consumer. And I will admit that is more of a headwind for value stocks than for growth.
Tom, Bitcoin at around 110,000 right now, very high levels. And you think that that's bullish for growth and risk overall?
Yeah. I mean, Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk-on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon.
Wow.
But it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.
All right. Tom, Charlie?
Let me speak about Bitcoin here for a moment. So obviously I'm the guy that loves things that produce cash, right? I love what? I love stock market investing. I love real estate investing. Why? Well, because those things throw off cash, right? Those, you own great companies, they make massive profits. They pour those profits back into the company to make even more profits in the future, right? They can buy out other companies that will make them even more money. They can buy back their own shares, which help their earnings per share go even higher. They could pay out dividends to you as a shareholder. There's all these different things, right? And if you know my investing strategy, GVD, growth, value, dividends, right? So it's beautiful. I love that, right? Real estate investing. Why do I like real estate investing? Well, real estate investing, generally speaking, you're only going to put 20% down on a property. So you're kind of leveraging your money. And, as long as you're buying properties in places that people love to move to and have a lack of land available, well, you're going to likely get great price appreciation over time. So your wealth is going to continue to increase as those properties continue to increase in value over time, right? Additionally, you obviously get the rents thrown off. And so, you get to make money from that as well. Bitcoin doesn't have that. We all know that, right? Bitcoin, it's not a company. It's not real estate. It doesn't produce you anything. But it was always like the next guy's going to pay more for it. And Bitcoin's performed tremendous. It's performed tremendous. And I'm not just talking about, obviously, if you look at it over time, right? From when it was, people were buying it, using a bunch of them to buy a pizza. No, I'm just talking about over the past, even like the 5-10 year span for Bitcoin. It's performed tremendous. And I'm talking even recently, I thought it performed pretty darn well, even when all the tariff drama was going on. Obviously, it was going down, but considering how much volatility there was in the market, I thought it performed the strongest I have seen it perform in a very volatile cycle where we watched the VIX go 50 plus. So that's kind of my 2 cents in regards to that. It doesn't interest me because it's just not an asset class I'm interested in, right? Same thing when I'm not interested in gold. You don't see me walking around with gold bars and gold chains because I'm like, I love gold, I need gold. No, because gold's predicated upon like, what's the next guy going to pay for it? And it just doesn't interest me. I like stocks, I like real estate, I like things that produce me money and it's made me a lot of money, okay?